Good afternoon, everybody, and welcome to the third of the sessions in the Second International Conference on Taxpayers' Rights. This afternoon's session is entitled Protection of Taxpayer Rights in Multi-Jurisdictional Disputes. And we were very conscious in looking at this topic that there may be some people in the audience who are completely aware and have been involved in MAP and MBA. MAP, Mutual Agreement Procedure, MBA, Mandatory Binding Arbitration. There may also be some people who have heard of these things but have never actually been involved. So there's going to be an element here of explaining the issues and then focusing on taxpayer rights particularly. Let me introduce our audience, our panel, sorry. In the middle of the panel is Cora O'Brien from the Irish Tax Institute. To my left is Mary Bennett from Baker McKenzie, and on the far side is Katerina Peru from the IBFD. Sadly, we were to have had a fourth panel member, Michael Sells from the German Federal Ministry of Finance. But as some of you may know, there is a strike preventing flights from Berlin to Vienna. And he only knew this morning he was going to be unable to fly. And we talked about by email, by coming by train, but he had to get back for a meeting. So unfortunately, Michael will not be with us there. So it's just the three members of the panel. To give you an overview of what we're going to cover, we've divided this topic really into four areas. We're going to start with some background explanation, an outline of cross-border dispute resolution, and a little bit about taxpayer and tax authority experience of the current system for multi-jurisdictional resolution of disputes. Then we're going to start moving towards the taxpayer rights side with a presentation on fair trial rights in general and in principle. And then to delve a bit more into detail, we're going to look at specific aspects of the fair trial rights. And we'll take a break after that for some questions and comments, because we think that by then members of the audience will probably have some comments you want to make, some questions you want to fire at us. Given that there's time, we will end up by asking the question whether the current proposals, that there are two proposals on the table at the moment to introduce mandatory binding arbitration. One of them is in the multilateral instrument, which is implementing the BEPS, and the other one is an EU draft directive on cross-border resolution of tax disputes. And if we have time, we'll raise the question for discussion: do those current proposals respect or enhance taxpayer rights? We've divided these topics up between us so that different members of the panel are contributing on different topics. So there's going to be quite a bit of to and fro between the panel desks and the lectern. If I may, I'm going to immediately start off the first of the topics, the outline of the issues, by handing over to Cora, who's going to be the first speaker on this topic. So Cora, over to you.
Thank you, Mr. Chairman, and thank you, organisers, for this opportunity. I am speaking to you today from a stakeholder perspective, so just to explain to you very briefly what my background is. I'm the Policy Director with the Irish Tax Institute, and we have about 5,000 members working. I suppose they're working in Ireland, but have a lot of kind of global and international experience. by virtue, I guess, of the type of economy that we have. So in preparation for today, I really spoke quite extensively to the membership and just to get their experience of issues to do with cross-border disputes. So my contribution is very much a kind of a practical, this is what is happening on the ground in terms of disputes, and then leading up really into the discussion on rights. So I'm going to cover a few things. Double taxation, or in fact the prospect of multiple taxation really, which is growing as the complexity of business transactions grows. I will also talk about some of the reasons why, apart from the business changes and the increased globalization and increasingly complex business models that companies have, we can expect more in the way of cross-border disputes because of a raft of changes that are happening at the minute in terms of changes to the global tax landscape, which you probably know about. My aim is really to try and tie that together for you to give you a picture of a vista, if you like, of how disputes already are quite significant and, if anything, are going to grow possibly exponentially. I'll talk a little bit at the end about the EU Arbitration Convention and some of the changes that have been mentioned. Probably the bulk of my comments will relate to taxpayers' experience of dispute resolution. And then I think it's interesting as well to look at some alternatives to the dispute resolution mechanisms, because rather than getting into these protracted and difficult disputes, there are initiatives that are taking place in many countries to get advance assurance or to get means of agreement so we don't end up in dispute. And then finally, as I say, the discussion on taxpayer rights. So some of you may know that in recent times the European Union has done a consultation really on its arbitration convention, and at that time when it was surveying stakeholders, 91% of companies said that they actually expect to have more double taxation, and more double taxation will lead to more disputes. There are differences of opinion as to whether this is going to be a short-term phenomenon or whether the longer-term outlook is kind of more disputes, and that's why it's particularly urgent that we're talking about this issue now, and particularly urgent that we talk about some of the implications for rights. So this little graphic is really intended to just explain some of the reasons why we're facing more disputes. If I take the BEPS initiative first of all, so I'm sure most people at this stage, I think even most members of the public at this stage, have heard of this acronym, base erosion and profit shifting. And there is no doubt that it was a huge achievement of the OECD to get consensus on the 15 actions in BEPS. But I suppose possibly the consequence or the price of getting that consensus was that it had to allow for lots of optionality in terms of implementation. And we are at this process of implementation right now. So we're right in the middle, if you like, of the actions being agreed, and countries are implementing them. The difficulty for taxpayers is that they're implementing them at a different pace. So some countries are implementing them faster than others in a different order or sequence. And countries have differing interpretations of the rules, and then the rules themselves have embedded options in them. So there are choices that countries can make. And for a lot of businesses, it's hugely complex just to keep up with what's happening. I think every day in my inbox I probably get 3 or 4 bulletins on such and such a country having implemented by country reporting or transfer pricing changes. It's actually quite difficult, not alone to understand the rules, but just to keep up with who has implemented what and in what order. So it's very complex, and different countries have different approaches to how they interpret rules. They might have domestic guidance, they might have case law in terms of interpretation. So businesses are trying to keep up with that as well. So that landscape is quite tricky. Then we also have sort of linked into that in some of the comments earlier on the backdrop to transparency. There's hugely more visibility now to tax authorities, and that is going to, with the first CRS reports coming in, country-by-country reports starting to come in towards the end of next year, that is really going to ramp up. And that is in addition to exchanges that are going to take place, not only of country-by-country reports, but also of tax rulings that companies have got, and advanced pricing agreements where you agree up front, if you like, what your transfer pricing treatment is going to be, and other similar issues. So tax authorities are going to have all this information, but having all this information, the onus on them to actually use the information is obviously going to increase as well. There will be government expectations on tax collection. So they're under pressure, if you like, from their sort of governments and the political world to collect more tax. And so we're going to see the implications of the transparency agenda resulting in probably more robust exchanges from international tax authorities. And again, that is potentially going to lead to more disputes. And the world of rulings is difficult as well because so we have exchange of rulings in the EU. We now have automatic exchange of rulings. And we also, so all of a sudden, a company has to think, well, a ruling that I've got in one country is now going to be exchanged with perhaps 15 other countries. And all of a sudden, it has implications for my position in those countries, and I can expect the tax authorities in those countries to start scrutinising it, and it could lead to questions there. So that context has changed. Also, in relation to rulings, we have the European Union looking at rulings from a state aid perspective, and the retroactive impact that could have is worrying some businesses in terms of, can we have certainty? How do we know that an opinion that we got or a ruling that we got we can rely on into the future? So just getting rulings is more difficult for companies. Tax authorities can be more reluctant to give rulings because they are concerned about the implications of giving rulings. And even if you get a ruling, it's going to be exchanged and you're possibly looking at it being scrutinised. So rulings and opinions, people have different perceptions of them. We talked a bit about the media this morning, but in the vast, vast majority of cases, they are there to give businesses certainty so that you don't trip accidentally into non-compliance and trip into a future dispute. And then finally, I suppose we have, as if that wasn't complicated enough, we have a lot of other reforms and sort of suggested changes in policy. We all know that the elephant in the room is what's going to happen in the US and how is that going to affect other countries internationally. How will it end up working in conjunction with the BEPS changes? How will the US tax rules knit together with the BEPS changes? There's uncertainty around the UK and Brexit. There are unilateral actions that have been taken by certain countries, for example, the diverted profits tax, and how does that sit, or does it sit comfortably with BEPS? And then for Europeans or businesses with European operations, we have CCCTB and the prospect of kind of two totally different tax regimes having to sit together, one based on arm's length on transfer pricing and one based on formulary apportionment. And however you feel about that, it is certainly complex. On the one hand, it could lead to less disputes within the European Union, but on the other hand, it's difficult to have those two systems operating together. So, as our chairman said at the beginning, there are different routes to dispute resolution. Mary is going to talk a little bit about double tax agreements and MAP and arbitration in the context of double tax treaties. And later on in the programme, we'll come back to the EU Arbitration Convention and talk a little bit about that. So these are different routes, and you always have the option of going to sort of through the domestic courts in the country as well, if, for example, it's an issue where you need a legal interpretation, or perhaps the counterparty has losses, and so MAP wouldn't really suit them in that situation. So those are the routes to dispute resolution. A lot of these are being looked at, and there are changes in prospect, and we'll talk a little bit about that. So the taxpayer's experience of MAP. I suppose the diagram is intended to convey the fact that, by definition, what is happening when you enter dispute resolution under MAP is that I think we've had this analogy earlier, actually, with the tug of war, so we're obviously very much into violent sports here, but countries are really, countries are trying to agree, is probably the polite term, about how profits should be allocated between the two countries in terms of a business. The difficulty is that there is a taxpayer there as well, and they're involved to some extent in the process, but really all the action is happening in the room without them. And that's fundamentally what's going on in MAP, and that came across in everybody that I spoke to in terms of their experience. They're feeling excluded, there's huge uncertainty around the process, and it's very costly. So the exclusion bit, as one of the companies explained to me, the only part of the process that we really get involved in is that we open the envelope and we provide the information and we pay the bill, and that's really it. And we don't have a lot of access to the process in between those different stages. So they feel that they're providing a lot of information and they're giving it to the competent authorities so that they can agree the liability. But because they're not at the table, they don't see how the case is being framed from the two sides. They don't see how their situation is being described. They don't have the chance to kind of retort, or, you know, if the facts aren't right, to correct them. And they feel, I suppose, that maybe that's not the fairest way to do it. They don't have a right of reply, and when the decision is finally reached between the two competent authorities, they're not forced to accept the decision, but that is the decision, if you like, and they can't change the decision, so they more or less have to take or leave it. And there is a huge amount of uncertainty attached to that. So what's the outcome going to be? You know, will there be an outcome at all? Because at the minute, there's no guarantee that you will have an outcome. Hopefully some of the improvements to the systems will deal with these issues. But at the minute, in a lot of cases, all you can do is go to your competent authority and ask for MAP. You're not necessarily going to get it, and you're not necessarily going to get a fixed and final outcome from it. You don't know how long it's going to take or what it's going to cost, and you're not sure that even if there is an outcome, that it will be implemented. In terms of uncertainty, got a little bit of feedback from the companies that there have been instances where there has been a sort of counterparty assessment issued, which hasn't really given them much information about the transactions that are actually being looked at, but is more in the line of, well, you're paying X in our country, and, you know, we actually think it should be 2X or 3X or 5X. And that's very difficult. Doesn't happen that often, but when it does happen, it's very hard to deal with because there aren't specifics. The MAP process itself, so there is a 2-year clock in a number of cases in a number of countries, but taxpayers are actually quite confused on the ground as to when that clock starts, because you can have a lot of backwards and forwards looking for information and then further information and explanation. So when does the 2-year clock start and when does it stop? There is a lot of information required. The scope and look-back period can be different depending on what countries are involved. So in Ireland, we generally have a 4-year look-back period, but a lot of countries would have up to 10-year look-backs, and so companies probably have to plan for the longest possible look-back period and make sure they hold the records for that amount of time. And sometimes they don't get any updates in the process and they don't get to see the documents, which kind of leaves them in the dark. And they don't have visibility of other cases and other kind of fact patterns and whether theirs is being treated differently. So all this uncertainty leads to a lot of cost. It's very heavy on internal resources. You can get a very broad scope of information requests from the tax authorities looking for what you might think are actually very unconnected bits of information. And there was a case of Berlioz which dealt with that issue. As I've said, you can have very long look-back periods. At a very practical level, documentation is often actually located in other countries by the very nature of these issues. And you could well find that a lot of the people who were involved in the transactions at the time have actually gone, particularly in the 10-year look-back cases. Professional fees are obviously quite an issue and quite expensive, and there's other ancillary costs. You may have to translate information, etc. So in some countries, you have to pay up front the tax that's in dispute. Again, we don't do that in Ireland, but in other countries, they do look for that. So that's obviously a cash cost. And then even if you don't have to pay the disputed tax, there can be quite heavy interest charges as well. So particularly for SMEs and smaller businesses, in many cases, the cost of that is just not worth the benefit of going to dispute, and they basically would be prepared to live with the double taxation rather than go into MAP or dispute resolution. So delays is kind of obvious what delays mean in the process, and they are a very practical issue. We also have found from our members that you can get situations where companies are encouraged that in exchange for not entering into the MAP process, there will be a reduced assessment. And that is a very difficult issue to deal with in practice. And then there are also sort of very real issues which are hard to describe but are very real on the ground. So you could have two competent authorities that have, say, 20 or 30 cases on their list between them, of which you're just one. And this may or may not be true, but I suppose it's this issue that perception can be important. Some of the taxpayers feel, well, we're one of 20 or 30, if the competent authorities want to sign off on this batch, where's my little set of facts going to end up in all of that? And is that really fair and transparent? And because I can't see it, I really don't know, how that worked out. Taxpayers have also found cases where information that was provided through MAP was then used to issue assessments for future audits, and that has sort of made them a little bit careful or concerned about I'm giving this information for MAP, but I could find myself with it opening a big audit issue for the future. Because of all the different requirements, there's going to be training and resources within tax authorities is a huge area. I know in Irish Revenue there has been money set aside for lots of new resources in competent authority. I'm sure it's not enough, and I'm sure that's the case for lots of other tax authorities as well. So, people are going to need top-class negotiators really doing their MAP negotiations, and they're going to need funds dedicated to this process to protect the tax base for the country. Confidentiality is obviously an issue. Some of the new proposals are looking at publishing information and if not full information about the decisions, then abstracts about the decisions, and so it's important that confidentiality is protected then. And then there's also just sort of worries about multi-disputes and how are they, when BEPS becomes fully implemented and all this exchange of information filters through, you could have 10 countries coming looking for a slice of the pie that wasn't there before. So I guess broadly the wish list that I was given was more taxpayer participation, a more transparent and shorter process with more conclusive outcomes and kind of focused on risks and priorities rather than small issues. And that sort of leads then into, well, is there any way of avoiding disputes or minimising disputes? We talked a little bit about advanced rulings and opinions, so I won't say more than that. More and more countries are offering advanced pricing arrangements and more companies are availing of them. Ireland launched its advanced pricing arrangements last summer I think it was. And there are also initiatives being looked at around benchmark APA agreements as well, and could one benchmarked agreement agreed between two competent authorities be used for other countries that the taxpayer operates in? Then there's also the potential of safe harbours to be used for sort of cost-plus arrangements or support services, and provided those are realistic safe harbours, they could be useful as well. And cooperative compliance frameworks where you have that relationship normally with larger taxpayers based on trust is something for the future. So at that, I think I'll hand over to Mary.
Yeah, great, thanks.
Yeah.
Thank you, Cora. Well, I'm just going to take a few minutes to finish off this first part of our discussion having to do with the experience with MAP and arbitration. And as Cora has indicated, when we talk about MAP, mutual agreement procedures, we're really talking about situations where under a double taxation prevention treaty, a taxpayer has reached the conclusion that one or both governments are somehow taxing him or it in a way that violates the treaty, that typically causes double taxation. And what is the solution? Because, of course, the substantive provisions of the treaties define which country should be able to tax the income in a particular case. If the taxpayer thinks that one or the other or both countries have somehow deviated from the solution provided by the treaty, his right at that point under the treaty is to present his case to the so-called competent authority. Under the treaty, that's typically someone within the tax administration who has been designated the ability to handle such cases. And the two competent authorities of the two countries are then authorized to consult together. And the language typically in the treaties has been, they shall endeavor to resolve the case. Like they have to try. They have to try. They should try hard. They should try in good faith. Does that happen? Well, actually, historically, and I think it's still true, in a very high percentage of the cases, and traditionally it's been over 90% of the cases that actually get into MAP discussions, the issue is resolved. And it's resolved with full elimination of double taxation. So why are we worried? Why are we talking about this? Why do we have all you good people here listening to this? There's a lot of concern that state of affairs is in the course of changing. We heard from Cora that the numbers of cases being brought to the competent authorities every year, they're going on a trend line like this, and the number of resolutions is going on a trend line more like that. And we're seeing that, every 3 years or so, we can expect the number of cases in the net inventories to double. And we are not seeing the number of analysts in the countries double at that rate to deal with these cases. We also have issues about something of a decline in the cases that are resolved in their ability to completely resolve the double taxation. We're seeing more frequent examples of situations where at the end of the discussions, the two countries say, well, yes, we see that there's double taxation alleged on $100 of income. We'll remove 70 and we'll solve that part, and the other 30 will get left with double taxation. That's a problem for the taxpayer. We're also seeing situations where taxpayers want to get into MAP, and for one reason or another, and we'll talk about the reasons in more detail as we go on, they're not actually allowed into MAP, or they're effectively prevented for one reason or another from getting into MAP. And so the statistics we see of what's happening with the actual MAP cases do not fully reveal the scope of the difficulties that are out there. We're going to start to hear about arbitration, and this is a new phenomenon, really, in the international tax world. Of course, it's existed for a long time in the trade and investment world. But for sovereign governments to decide with respect to their taxes, the lifeblood of their operations, that they might give over the power to resolve a double taxation case to an arbitration panel, that is a relatively new concept. Now, we are seeing it start to show up in tax treaties, and we'll talk a little bit about the history of that. And of course, we've had the EU Arbitration Convention for a couple of decades. The experience thus far is that the number of cases that actually go into arbitration is very small. In the United States, it's still single digits. I think it's still very low in the EU as well. Does that mean these provisions are not working? No. What happens, what certainly the experience has been when you have a well-functioning arbitration option available, mandatory arbitration, is that cases never have to get that far, that operates as, for one reason or another, a great incentive to solve the case. The competent authorities find themselves more apt to reach an agreement than if they had a completely open-ended period for themselves to keep trying. If they know that at a certain point they might have to kick it over to an arbitration panel, somehow their differences get minimized and the cases get solved much more quickly. So that's been a successful, at least the early experience is that it's a very successful mechanism for getting cases resolved. But there continue to be issues, and arbitration is a very small percentage of the landscape that is covered. In traditional MAP arrangements, there continue to be issues about barriers to access to MAP, and as I mentioned, we'll talk about those. Timeliness. How much time does it take to get a case resolved? And you think if you kick it to two competent authorities and they might meet, the good relationships would be probably 2 to 3 times a year. The less frequent ones are less frequent, and as the taxpayer, you might end up, with a tickler. Once you've filed your case, well, I'll call them up every 6 months and see how things are going, and do they have a meeting planned? And you do that, several years in a row, and you don't know really how well your case is progressing or whether it's ever going to get resolved. If there's no deadline, there's no deadline, and sometimes these cases can drag on for years. Transparency is an issue that we'll talk about, not just transparency about how do I get into MAP? Whom do I contact in the government? Who has the responsibility for this? What information do I have to give them to make sure that it's going to be dealt with properly? Very practical issues, down to what's happening with my case, what positions are the two governments taking, do they have the facts right, does everybody understand everything, is it going to get resolved, all those kinds of issues, because the taxpayer is typically not involved in the discussions. These are government-to-government discussions. The governments tend to come at this with very much the sense that this is not, the taxpayer is just a stakeholder in the middle. The argument here is about as between the two governments, whose money is this? Now, of course, that can be true to a large extent, but it's hardly ever true. In real life, usually the taxpayer cares which government is going to get to collect the tax at the end of the day, but procedurally, the taxpayer is sitting outside the room, or, is sitting at home, wondering what's going on. And then this issue about guarantee of an outcome, the shall endeavor to resolve the case standard, that is the typical mutual agreement standard, gets you there a lot of the time, but you don't have a guarantee that it's going to get you there. And when you combine that with not knowing how long it's going to take, you have questions. I want to talk a little bit just before we move on to more general principles of taxpayer rights and into the more specific issues about these cases. There have definitely been efforts made by various bodies to try to improve the situation of dispute resolution in these cases. And one can go back to the 1990s with the EU Convention on Arbitration, specifically for transfer pricing cases. And that has produced a handful, at least, of arbitration decisions. There are some flaws, I think it's fair to say, in that convention, some shortcomings that have made it less effective as a means of making sure that all cases get resolved within an appropriate time frame. And I think that's partly why we're seeing the EU come back to this area 25 years later and see if they can improve that. In the meantime, there's been other activity. In my prior life, I spent some time at the OECD, and just about 10 years ago this month, we were finishing up a multi-year project on dispute resolution, which addressed a lot, studied a lot of the issues and came forward with really 3 different changes that were intended to improve the situation. One was to introduce into the OECD Model Tax Convention a mandatory binding arbitration provision, which effectively said that if a case was in discussion between the competent authorities for 2 years and had not reached a resolution, that the taxpayer could insist that it go to an arbitration panel for resolution, and it provided a lot of guidance on how countries could structure those arbitration proceedings, giving them a lot of flexibility on how to do it. There was also work done to toughen up, if you will, the commentary under Article 25 of the Model Tax Treaty, which is the mutual agreement article, to try to clarify countries' obligations to let cases into MAP and to deal with them in a way that was supposed to achieve resolution. So there were some changes made to the commentary, but there was also a recognition that there's a lot about how cases can get resolved in a productive and successful way that may not be absolutely mandated by the terms of the tax treaty mutual agreement article, but are best practices. And so the third piece of what the OECD did 10 years ago was to produce something called the Manual on Effective Mutual Agreement Procedures, fondly known by those of us that deal with these things more frequently as the MEMAP. And the MEMAP laid out about 25 or so best practices of what both taxpayers and governments should do to make MAP more effective. And we will talk about a number of those when we get into the section where we talk about specific aspects of taxpayer rights, because obviously things start out as best practices, I think, before they evolve into rights. So that work was done. Unfortunately, that didn't solve everything, but meanwhile we had some work done also at the UN, and one of the things that the UN did in its last update to its model tax convention was to put an option into the model for countries to have a binding, mandatory binding arbitration provision in their treaties. I think it's very fair to say that among the community of nations, it's probably the OECD member, the more developed countries that are more accepting of the concept of having an arbitration provision at this point than the wider range of countries that make up the UN membership. But still, it was a major step forward for the UN to put that option into its model. They also produced their own guide on mutual agreement procedures that was very reflective of the same kinds of best practices that the OECD had identified. So that got us up through 2012 and 2013, and we had the OECD's Forum on Tax Administration, which is a very interesting body of commissioners of revenue from certainly 40 plus countries. It might be quite a bit more than that now, who gather together on a regular basis to address issues of tax administration. And they decided to form, for the very first time, a forum on mutual agreement procedures to try to make sure that the competent authorities of governments were all coming at this exercise with the same mindset, the same idea that their obligation here as competent authorities was not to maximize the revenue of their government, was not to make sure that they were upholding revenue assessments brought by their audit functions, but to make sure that the double taxation risk that was presented by cases brought to them was resolved, and resolved in a timely way, and resolved in a principled way. And so that set of discussions got underway. At the same time, we had the BEPS project get off the ground, and Action 14 of that BEPS project was, I think people pretty routinely describe it as the only taxpayer favorable action in the whole project, but one that was aimed at improving dispute resolution. That produced a final report in October of 2015. Interesting, here again, you see the same sort of differences that one saw back in 2007, where there were some recommendations that came out in the form of so-called minimum standards, where all the participating countries agreed, yes, these are things we should do. We agree that we should do and we will do. But then there were also a series of best practice recommendations. We're not saying we have to do this, but we recognize that these are, good practices that you could aspire to, but we're not committing to do them. And then there was a subset of countries that were interested in producing an arbitration provision. And of course, the participation in the BEPS work at the OECD was much broader than just the OECD membership. You had the G20 countries, you had a dozen plus other countries early on, and now that has widened out to more than 100 countries that really are participating in these discussions, broadly speaking, on implementing the BEPS resolutions. And there's a multilateral instrument that has been published in November that will implement a lot of the treaty recommendations from the BEPS project. Of the 100 or so countries that participated in working on that draft multilateral instrument, there were 20-ish that agreed to work on the arbitration provision that will be a part of it as an optional piece. So you can see that's still too small a minority of the community, but there's progress bit by bit. And then we've heard the reference to the EU's recent proposal to try to improve their arbitration convention to, or their arbitration mechanism to expand it well beyond transfer pricing to all kinds of double taxation risks and to improve the procedural aspects of it. So there is progress happening, and I think we can start talking detail.
Let's go then to the second topic and start look at this from the point of view of rights of taxpayers. And if I may, I'll ask Katerina to take us into the discussion of fair trial rights as they may apply to MAP and arbitration. So Katerina, over to you.
So, protection of taxpayer rights in multi-jurisdictional disputes. Let's start with a simple picture. This is what happens in domestic law disputes, tax law disputes, where you have the taxpayer and the tax authority being parties in the procedure before the body, the dispute resolution body. Nothing wrong with that, nothing strange with that so far. This is what happens when you discuss tax treaty disputes before domestic dispute resolution bodies. You have the taxpayer again, the tax authority on the other side. They are both parties to the dispute. They present their dispute before the dispute resolution body. Again, nothing strange with that. Now, what happens when we have to discuss tax treaty disputes under the mutual agreement procedure found in the tax treaties themselves? We have again the taxpayer and the tax authority and the dispute, but then this is a tax dispute resolution body composed of the tax authorities. Taxpayer is no longer in the picture. The only parties to the disputes are only the tax authorities. And where is the taxpayer in this scheme? And again, does this seem right? Well, yes, of course, sure. Lots of people would say that, and so far this has been the main position. What's wrong with that? Well, let's take a closer look to see whether this is right or not before going there. I'm reading the report prepared by Nina and her team in their function as a taxpayer's advocate in the US. And I see that we should be looking towards a taxpayer-centric tax administration, that we should encourage taxpayer trust and confidence. We should change the culture from enforcement-oriented to service-oriented. We should get the taxpayer feel that he's engaged in the tax system he is a part of. And if the tax authority does not show respect for the taxpayer rights, this erodes trust and this reduces voluntary compliance. Now, what can we do then in relation to the picture that we were seeing before? We are looking towards an international universal standard of fair trial guarantees regarding dispute resolution. And what we find, more or less, is the same wording alongside many instruments that provide for the protection of citizens' rights. And we find the right to a fair trial that reads along these lines: in the determination of his civil rights and obligations or of any criminal charge against him, everyone is entitled to a fair and public hearing, and this is where we have the procedure, within a reasonable time, by an independent and impartial tribunal established by law. And here we have the organization part of the dispute resolution body. Great, let's say. Let's see, what is it? A fair hearing. First of all, we have access to the court. That's the main subject. In order to guarantee a fair hearing, you must have access to the court that will grant you a fair hearing. A hearing in the presence of the private party involved, freedom from self-incrimination, equality of arms, the right to adversarial proceedings, a reasoned judgment. All these aspects are part of the right to a fair trial. Fair hearing. Public hearing. Publicity in the proceedings, the presence of the press, the requirement of oral proceedings, the judgment is pronounced publicly. These are also some of the aspects of the public hearing aspect. Within a reasonable time. Of course, that would depend on the complexity of the case, but here we are talking about effectiveness, that we want to have a remedy that is effective. That means that it leads to a final, binding solution within a reasonable time. And of course, the organization of the dispute resolution body, an independent and impartial tribunal established by law, where independence is judged with regard to the executive, impartiality is the absence of bias, and tribunal is anybody that has judicial functions. Now, I will focus on two aspects. So the right to access to the court, which is fundamental, and in which limited exceptions are allowed, and the right to an effective remedy, which is reaching within a reasonable time a final binding decision. One would argue, and this is also the prevailing position still, since taxpayers have always recourse to domestic courts. So the first two pictures that we saw, for their tax treaty dispute resolutions, their right to a fair trial is always guaranteed because they always have a remedy at their disposal that satisfies fair trial guarantees. No, I would say. Let me explain a little bit of that. Why not? In one sentence, we would say, one is none and two is too many. That means going to the courts in one country does not guarantee an effective resolution of your case, whereas going to the courts in two countries, as in many cases in international cross-border tax disputes would require you to do, is too many because, one, it does not require an effective remedy either. It's no guarantee that the courts in the two states will reach the same decision, and you have to also deal with costs and the combined length of the proceedings in two jurisdictions. So I would say, let's be cautious when saying that having access to the domestic courts who provide for fair trial guarantees would amount to provide for fair trial guarantees in cross-border tax dispute resolution. So what we can do? We can look at the international level, and we can look at what we have available. And now we are talking about the mutual agreement procedure that we find in tax treaties. Is it an effective remedy in the sense that we described earlier? Yes, we have heard it before. 90% of the cases can be solved. That's great. But still, we're not quite there. Let's see how this remedy does as far as effectiveness is concerned. Do we have a reasonable duration? Yes, in some cases. The OECD MAP and arbitration, the combined, therefore, and the EU MAP and arbitration, they do provide for a streamlined process that arrives at a result within a reasonable time, at a predictable time, let's say better. Do we have a final decision? Again, you can see yes and no. And we have binding effect, yes, if we arrive at an effect. There's an asterisk for the UN MAP and arbitration because there is not in the hands of the taxpayer to enforce the arbitration phase. So therefore, that part, maybe we're not in the same level of effectiveness as in the other cases. Let's see about access. What is access? So we can define access as having control over the procedure. And we have access, and access is guaranteed only if someone is party to the proceedings, and he has the same control over the proceedings as the other party. Limited participation rights that are provided in the MAP and arbitration do not create enforceable rights. So they are granted if and when the tax authorities, the competent authorities, would agree to, in most cases. That is why we cannot say that they do amount to access to the proceedings. So let's have a look also at the independence before assessing access. And this relates, as we said before, to the organization of the dispute resolution body. And again, we have four aspects of the independent tribunal. One is the way the members are appointed. The second is the duration of their term, the guarantees that they enjoy against outside pressure, and in general, the appearances of the body, appearances of independence. Again, we can see how various remedies that we have available measure against independence. The yes or no in the duration of a term and guarantees against outside pressure in the joint competent authorities committees is because in some cases, depending on the competent authority, there may enjoy a higher level of independence or not, or their term is defined in different ways. So in some cases, on a case-by-case basis, they may be more look or enjoy independence or not. And now let's move to an overall assessment. So we have MAP on the one hand, combined MAP and arbitration on the other hand. Effectiveness, yes, no. Independence, yes, no. Access, no. And that is where the problem lies. The last part. So we do have an effective remedy. We do have a remedy that satisfies independence of the organization of the body that it is entrusted with the dispute resolution, but we don't have access to that. And now this is where we should perhaps focus our efforts, how to provide access to that remedy. In order to assess access, we could look on a comparative level to what happens in other areas of law, and I'm talking here about the experience in the case of investment disputes, where we have similar structure, where we have a private party and the state being in front of a court and arbitration panel. What is access then in that cases? Nominate an equal number of arbitrators, agree on the president or the secretary of the tribunal, agree on the rules of arbitration, on the procedure in general, and the timetable, be present either in person or through legal representatives, being represented by counsel, have free communications between the members and the panel, file reports, memorials, counter-memorials, and any other documentation that is relevant to the case, submit observations and comments, use of experts' opinions and witness reports, have oral hearings, examine the witness, examine the experts, interpreters may be present to help with the witnesses, access to all the records, written transcripts of the oral proceedings, translations, minutes of meetings, etc., and the costs, everyone bear its own legal costs and expenses and share the cost of the arbitration. That should give us a look of what access would mean in the case we decided to grant access to the MAP and arbitration under tax treaties. I think I should stop here before going forward and give the floor back to Cora. Thank you.
There it is. So you've heard quite an extensive discussion there in relation to the right to a fair trial and effective remedy. There are a number of fundamental rights in the EU, and they're probably mirrored quite closely globally. I'm just going to hit very quickly on some of the other ones. Article 40 of the Charter talks about the right to good administration and to have, these are the words the Charter uses, to have your affairs handled impartially, fairly and within a reasonable time? And rather than answer that question, I suppose I would just put it out to you. Do you think what you have heard represents impartiality, fairness, and a reasonable timescale? Those are some of the challenges under good administration. We've talked about the fair trial. Protection of personal data is also very important. In speaking with some of our members who had seen some of the documentation in relation to their MAP cases, there was data in there which kind of described arrangements that they wouldn't have agreed with. It extended opinions about the taxpayer, which they wouldn't necessarily have agreed with, and didn't get to see or didn't get to comment on, and maybe opinions about the business transactions as well. So there is data there, and doesn't the taxpayer really have the right to see how they're being described and what's being said about them? There are freedoms to conduct a business, and arguably, in extreme examples, if you're involved in a very large dispute, it can actually hamper your ability to conduct your business in that country. So could that impinge on that freedom? And then the principles of legality and proportionality. And I suppose it was mentioned earlier this morning, and it is certainly very true, there isn't a balance in a relationship between a tax authority and a taxpayer, and there never will be. And for this reason, we can, in some respects, we can have a great discussion about taxpayers' rights and the importance of enhancing taxpayers' rights. But the reality on the ground is that it's really unlikely that a taxpayer, unless they have a very extreme case, is going to assert their taxpayer rights. Because you have to remember that that taxpayer has got to continue to have a relationship with the tax authority, and they're trying to balance what they might feel is kind of unfair actions or unfair exclusion or unfair comments said about them. But they're not really, or certainly what I would be told is it would only be a really extreme example where you would actually make a complaint about that because you have to deal with the tax authority. So that's kind of how it plays out in the real world, and I think it's important to be conscious of that.
That's fine. Good stuff. Great.
I was just going to say quickly about that, Cora. In some countries, like the one I come through, the taxpayer can be a bit between a rock and a hard place, because if you are in a situation as a U.S. taxpayer where you have a foreign government that has asserted additional tax against you, and you have an opportunity to have that discussed in MAP, and you don't take that opportunity, you may have the risk that you lose your foreign tax credit for that taxes. So you may face double taxation, and that has made U.S. taxpayers think harder about going to MAP in many cases. I think we're going to transition here from some of these general principles that we've been talking about, transparency, getting a guaranteed outcome and timeliness, etc., and talk in a little bit more specific aspects about how does that play out in particular aspects of MAP and arbitration. And let's take it apart a bit, piece by piece. Let's think about access to MAP. And here, I mentioned earlier something as simple as, do you know whom to contact? Has the government published any procedures about how you would bring a MAP case to them? That is a movement that has started. Some countries are way ahead of others, but we're starting to see more and more countries do that. Very helpful for a taxpayer that thinks they need to bring such a case. What about the types of cases that can be brought? The treaties certainly say that, if you think that you've been gotten taxation that's not in accordance with the treaty, you can go to MAP. Well, not all the governments feel that it's that broad, and some of them would like to restrict the types of cases, and they might do it either informally or more formally. Certainly in the area of arbitration, where we're seeing some of the countries coming to the table to say, well, we would be willing to do arbitration, but not just for any kind of case. We're going to define the types of cases that we think should get that far and limit them. So that's a potential problem. A very significant issue that has really increased in recent years, and we actually expect it will continue to increase, is governments saying, yeah, well, we're ready to do MAP in principle, but not if we think the taxpayer has engaged in tax avoidance, God forbid, and unilaterally say, we think the taxpayer has run afoul of our anti-abuse rules that we have either in the treaty or domestically, and we're not willing to talk about the issue with the other country. And if you can't get both countries to the table, you don't have a MAP discussion or a potential for resolution. And so one of the issues is to have it clear that a country can't unilaterally say, we're going to keep this out of MAP because we think the taxpayer is engaged in tax avoidance. That should be a joint discussion between the two countries. If they both agree, then fine. But if the other country thinks that the taxpayer was justified, et cetera, then that's a different issue. Forced settlements. There shouldn't be forced settlements. What do we mean by that? Well, one of the things that we see in practice in many countries is at the examination level, the examiner saying, we're going to propose an adjustment against you, and that adjustment is going to be $2 million, provided you agree not to take the case to MAP, and we can fully settle it now. But if you think you want to go to MAP, that adjustment's going to be $10 million, or many multiples of that. And what does the taxpayer do in that case? They can take the $2 million and settle, pay tax on the $2 million in settlement, or they can run the lottery in MAP and on a $10 million adjustment. Is that a practical barrier to access to MAP? You better believe it is. What about having to waive domestic remedies? One of the issues is, as Cora said, you always have the ability, if a state is assessing an adjustment against you, to take that to your national court, and you might get that resolved, and you might not. That's not necessarily going to guarantee you a total resolution of double taxation as between the two countries, so taxpayers would like to think about MAP. But if you don't have a guarantee of an outcome in MAP that is going to resolve the double taxation, then you probably want to fall back on your ability to take the case to court. Some countries will say, well, we'll talk about your case in MAP, but only if you agree up front that you are waiving your right to go to court on this issue. That's not what's supposed to happen, but that's an issue that is a problem. Other issues about what the taxpayer community refers to as pay-to-play requirements. Sometimes a country will make an adjustment and say, well, okay, we'll agree to talk about it in MAP, but you have to agree to pay the tax that we're assessing up front, or 50% of the tax up front. Well, understand that the taxpayer has already paid the tax to the other country, so this is like double taxation, at least temporarily, if not longer, just in order to get the case into MAP. That's not a great thing, and can act as a barrier in practice. Another issue that's more controversial, perhaps, is what happens if you have a case or an issue that a domestic court has already ruled on, but it's leaving you in a situation where you've got double taxation. Can you bring that case into MAP, and will your competent authority be prepared to either argue successfully for your court's decision with the other country, or maybe vary from it in order to settle the case? So those are issues. Transparency, we've talked about as something that would be good for taxpayer rights. We talked about clarifying the procedural requirements. I've mentioned, it'd be nice to be informed, to be kept informed about the status of your case. That can be a challenging thing. What about the ability to review the position papers that the two governments are sending to each other? Does that happen? Probably not very much sometimes, and for some countries, but not as a routine thing, so you may not even know what they're arguing to each other or whether they have the facts right of your case. Do you get an ability to submit a position paper of your own as a taxpayer? Usually not. That's not something that you see very often. So you are really standing outside the process. Do you get to meet and make a presentation of your case face-to-face to the competent authorities, or in arbitration to the arbitration panel? Now, this MEMAP manual that I mentioned to you earlier recommended that taxpayers get to make presentations in cases that were highly factually complex. And a number of governments have said, yeah, that can be helpful, but that's just a sort of best practice at this point. It's certainly not routine. And what about at the end, the ability to be advised of the decision and the rationale in writing? It might happen, it might not. I mean, certainly you get advised of the decision. You may not get that in writing. You may or may not get an indication of what the rationale is. And so there are issues there. Getting an outcome based on principles, we've talked about, how confident can you be that there's no horse trading going on, that your case is being traded off as between the two countries as a sop to get another case solved. I think on the whole that does not really happen. That's certainly what we hear from the competent authorities, but there's a lot of perception that that could be a risk. What is a problem is, can you get a principled solution? Are countries taking the same position on issues depending on which way a payment is going? Do they feel the same way about outgoing interest as incoming interest, or inbound distributors versus outbound sellers? There certainly is experience of countries switching their views depending on whether they're going to get the revenue or not from the characterization. Will you get a solution that fully resolves the double taxation? We've talked about how that may not happen in every case. What about parts of it that aren't actually the tax itself, but would be, for example, interest on the tax? You may have a situation where you've paid tax to one country. They go through, you get an assessment from another country. You go through mutual agreement. The agreement is that, okay, that tax really should have gone to country number 2. So country number 2 gets to collect the tax at that point and charge you interest for all the years that this has been kicking along. Now, you should get a refund from country number 1. And what would be nice would be if you got interest on your refund, and even nicer at the same rate that you're paying country number 2. But those interests and those interest amounts can multiply to be greater than the tax itself. But that's not always coordinated, and not all the countries are willing to agree even to try to coordinate that in MAP. How is the MAP process, how is the competent authority process staffed and run in countries? Are there situations where there are performance indicators for MAP personnel that include revenue results for that country? Not a good thing if you're looking for a principled outcome from the staffers, and also, are there enough of them, and are they adequately trained, and do they know what they're supposed to be doing in terms of resolving double tax cases? And then finally, this issue about the right to actually get to an outcome. Do you have a guarantee that you'll get to an outcome? And one of the issues that's actually been in discussion currently is the question of, supposing they do reach an agreement, will it get implemented? And what happens if you've got to the situation where, country number 2 should get to collect the tax per the agreement, and so country number 1 should be giving the refund, but, I'm sorry, the deadline for getting refunds from country number 1 has passed. Too bad. Well, the treaties have language typically that overrule that and say that it should be implemented, but there's been discussion about that, even most recently at the OECD and the MLI context. And then, of course, arbitration is the thing that would give you a guarantee to an outcome, but will there be access to that? So those are some of the issues in practice that affect these rights.
Thanks very much, Mary. At this point, I wanted to go, if I may, to the audience and ask whether you have any comments, experience, questions about MAP and about arbitration. Just to give you some topics to think about, these were some of the specific aspects that we highlighted in the presentations: taxpayer participation, abandonment of rights, issues like that. Just while you're gathering your thoughts, I'll just mention I was at a transfer pricing conference last week. It was one of these conferences where participants could vote, and we asked the audience, could you please vote on how many of you have been involved in a MAP procedure that was resolved in less than 2 years, between 2 and 5 years, or that took more than 5 years. 100% of those who voted said their MAP procedures had taken more than 5 years. None of them had been resolved in less than 5 years. Back at home in my chambers, I have a very sad, very thick file of a competent authority procedure which took, I think, 17 years in total, at the end of which the two authorities decided they were never going to resolve it. Well, with those points in mind, can I throw it open to the audience? Do we have experience, comments, questions? Yes, Alice. Do we have a microphone? Just a microphone.
Thank you very much for a fascinating discussion. So my experience in this dates back over 30 years when I was a practicing lawyer. And
you started practicing very, very early.
And distressingly, it doesn't sound like things have changed all that much.
Yeah.
But my question is really about, what about all those taxpayers who are facing the very problems that you're describing and who don't have access to MAP, that they're not dealing with treaty countries and they don't have the ability to have that? What are the implications for that? I can imagine some of them, but I'd be really interested in your responses.
Okay, I think we'll gather a couple of comments and then put them to the panel. Michael, over there.
Just a comment. I would like to emphasize that I find it very regrettable that under the BEPS project not more progress, or no progress at all, to be honest, had been achieved, because this kind of minimum standard we have now in the area of MAP is a kind of joke, because in 99% of all the treaties we have MAP rules, and I think it's even a step back, because before that we had arbitration, or we still have arbitration clause as part of the Model Convention, so it was already a kind of minimum standard, if you call them the OECD Model Convention as a minimum standard, and now it's even less than a minimum standard after the BEPS project. So therefore I think it's really a pity that this is now even a step back in my view.
Luca, with the back.
Thank you very much for the presentation and for inviting reflections on these aspects. I have a couple of comments, actually. One is this: in the context of independence and impartiality of the MAP, I wonder whether the taxpayers should be allowed to know the criteria that the arbitrators will use before the procedure starts. In other words, I know that there are some maps which use somewhat like baseball criteria, or somewhat like particular criteria which requires offers from each one of the tax authorities. In the context of independence, impartiality and transparency, would you agree that the taxpayers should be able to know the criteria of a map before the map is started, before? I believe that will enhance the position of the taxpayers. And I have a second comment. Someone mentioned just before the European initiative, I suppose it was talking about the recent proposal by the European Commission on double taxation dispute resolution mechanism. I mean, the proposal put forward in October 2016, recent proposal. I wonder whether you would agree that that proposal would deserve to be a little amended, because the cases of juridical double taxation which were not resolved by the Court of Justice, in the cases, for example, let's remember Ketchet and Morris, Block, and so, those cases of juridical parallel non-discriminatory double taxation are a big problem with the internal market. The preamble of the European proposals says that juridical double taxation should be welcome, but the proposals only includes business taxpayers, not non-business taxpayers. Would you agree that the proposal should be amended to be extended to all taxpayers, even non-business taxpayers? Thank you very much.
Okay, we'll come to the European proposal if we have time in a moment. Can I put it to the panel? Those comments from Alice, from Michael, and from Luca. Anyone want to pick them up? Mary.
I'll say a few words, I guess. I mean, in terms of versus 30 years ago, let's say, I think there's been progress in a number of respects. One is just that the network of tax treaties is much broader than it was. So the ability to get potentially to map is very much increased from years and years ago. You still have all the practical issues that we talked about, though. I do think that the focus on improving MAP and the discussion, the ongoing discussion about arbitration is advancing the ball. It's just much more slowly than I think many of us would like. And Michael, I mean, I agree with you that it was, I think, in hard terms, very disappointing what came out of BEPS, and there were aspects of it that I thought were really a step backward from where certainly the OECD itself was 10 years ago. Now, whether that was a factor of backsliding by OECD members or the discussion included so many more countries, it's hard to say at this point. And in terms of impartiality of, I guess you could only mean arbitration panel members because the competent authorities are. Well, maybe, I'm not sure. I mean, certainly the competent authorities, they're part of the revenue authority of each country. In that sense, there's always an issue about independence and impartiality, but that's part of the exercise is to have them trained and staffed and structured in such a way that they actually can operate independently. And that takes some effort on the part of the tax authorities to make sure that's how it happens.
I'll just make a couple of brief points on the very good point you raise about smaller businesses. I suppose coming from a country such as the one that I come, where we're very export focused, we have a lot of relatively small businesses that are dealing in a smallish way with export markets just because they have to. And so they are, there are lots of cases of them just settling with foreign tax authorities. They couldn't dream of going into this process, and they may not always agree the technical position, but on a cost-benefit analysis, it's just less costly and more certain to just pay it, and that's a real shame. So I completely agree. And on the point on BEPS, I was just looking at the coffee break actually this morning. On the OECD website, they were talking about the peer review process, and I was reading some commentary from the US about criticisms because if taxpayers want to give input and feedback on the peer review process for dispute resolution, they have to be named and they can't comment through the process anonymously. And, and it acknowledges on the website that this complicates their negotiations with revenue authorities. So, that is, we see this all the time at home. Taxpayers, they're reluctant to be named and give feedback, and because they're afraid of the repercussions. And some other way does need to be found of getting decent feedback without compromising taxpayer confidentiality.
Okay, I think we'll just take one more question, perhaps then.
Well, it's more a statement than a question, because you mentioned quite often the EU new instrument and proposals that just landing on our desk. And indeed, we're not addressing all your points, and especially the fact that you have the applicant himself disappearing during the procedure, and the lack of checking facts and things, which most of time are of utmost importance to run the arbitration. But I do want to give credit to the Commission's proposal, which address some of the points you mentioned, in particular as to the endeavor. We have an obligation of going through and concluding and settling the deal for the double taxation. This is not something that we are dreaming of. We are doing that. The second thing is that you have recourse at certain point when you see that things are getting muddy. You have the possibility to ask a court to settle the thing in due course. This also is a guarantee that you're going somewhere with your procedure. The third thing is that we worked on a timeline, and as you reasonably assume, this is of essence. And the essence is that within 15 months, the procedure shall be completed. And that's also an attempt for settling and making this far more attractive for companies, for businesses. We also worked on the scope, precisely to extend the scope and to end up with this limited implementation, limited description of the scope of this directive and the different practice in different member states also. And finally, we will have an obligation to have a notification of the taxpayers and to be published. So publicity is also a last point in our proposal. Nobody knows what it will become in the washing machine of Council and Parliament. That's people knowing Brussels know what it can be. But at least we definitely try to keep up with those issues you mentioned. Thank you for your time.
Lovely. That was a wonderful lead-in to the very last topic, because I promised you that at the end of the session we would come to the future and the MLI and the EU draft directive. Can I ask Mary, first of all, to come up and talk about the MLI provisions very briefly, and then Cora to follow?
Yeah, sure. So there were, out of the MLI, there were some parts of it that address the basic MAP rules under Article 25. One of them was this question of whether a taxpayer could bring his case to only the country where he lived, or could he also bring it to the other country? And the idea was to let him bring it to the other country as well, in order to stop this practice of having one country say, well, I'm not going to even listen to you because I think you've done something abusive. That was put in as a recommendation, but with wiggle room for countries to get out of it. So it was not the best minimum standard kind of result, I would say. Also, they provided that, make it very clear that taxpayers have 3 years from the date of notification that they've got inappropriate taxation to bring a case, and then this issue of making sure that an agreement reached would be implemented notwithstanding the time limits for refunds in the other country. That's something that's been in the OECD model all along. That was continued, but according to Michael's theme here, they have added some wiggle room there too to give countries an option not to include that very helpful language, provided that they can agree with the other country to reach some limits on how long a country has to bring a new adjustment in the first place. So I would say mixed results on those. There is an arbitration provision that is an option under the multilateral convention, multilateral instrument. It's like the OECD existing model in that taxpayer can initiate arbitration if MAP is not solved within 2 years. Unlike the existing model, the MLI would give countries picking this up the right to limit the scope of the cases that they would allow to be eligible for arbitration, provided they can get the other country to agree. Like the existing arbitration, there's no direct participation of the taxpayer in the proceeding, either in appointing the arbitration panel or in being involved in the cases. The default format is what the OECD calls final offer arbitration. The Americans call baseball arbitration because it's a way that things work in professional baseball in the US, but each side gives a figure to the board, and the board picks one or the other figure, doesn't have to give a rationale at all. This is what the US does. It has been extraordinarily successful in getting to quick resolution and in driving the competent authorities much closer together before you get to the stage of arbitration. The other option, which is the more preferred in Europe, is the independent opinion, where the arbitration board gets position papers from both sides and can come up with its own resolution. That is available as well. And the taxpayers are required to keep information about the arbitration confidential, interestingly enough. Thanks.
Almost there. Finally, the EU Arbitration Convention, a very good synopsis of it. All I will say in the last minute or two is we've had an EU Arbitration Convention for some years, and we've had mandatory or binding arbitration in it. And there are some changes proposed, some very welcome changes. For anyone not familiar with the convention, there's basically 3 stages in it. There's the double taxation arising, and there are kind of strict time limits around when the taxpayer has to go to the competent authority, and then how long the competent authority has to make a decision whether it's going to admit the case into MAP. If now under the new proposal, if the competent authority says no, it's not going to MAP, there is a new appeal route to the National Court, which is that is a very welcome development. The only caveat that I would say is that's quite a hard issue for a national court to decide and overturn, if you like, the decision of a competent authority. But notwithstanding that, it is an important development. There's a sort of much stricter timelines. You have 2 years for concluding a successful MAP with the possibility of a 6-month extension. And then if it's not concluded, it automatically goes into arbitration. And again, there's improvements there. If the competent authorities haven't set up the arbitration panel within 50 days, then the taxpayer can again go to the court and get an arbitration panel set up. And then there's timelines around getting a final decision. That final stage 3 arbitration is now limited to 15 months. So we have a fixed time frame, and that's very welcome. And finally, and this comes from the Commission's own document, so I suppose the shortcomings in the dispute process, a prolonged process is well dealt with in this proposal because there's tighter timelines. Denial of access is dealt with because you have the option to go to the court. And the scope has been extended beyond transfer pricing and PE. And I suppose the fundamental issue is still there. Why can't the taxpayer participate? And is the taxpayer going to get a better outcome if they have a better right of participation? And that's where I'll finish.
Great. And the last word, clap by all means. The last word goes to Katerina for an assessment, an evaluation.
Okay, simple table. I was quite happy with the proposal, I can say, because it is major improvement compared to what we have so far. So I'm just going to go through independence, yes, enough guarantees, impartiality as well. Reasonable duration, yes, with an asterisk, because from my perspective, where a domestic court will intervene, maybe we will have too prolonged duration, so this may affect the timelines. Final decision, yes, we have. Binding effect, yes. Oral hearing, presence in the proceeding, right to be represented by a counsel, yes. Equality of arms, adversarial proceedings, and reasoned judgment. This will depend on the rules of functioning. So this is a crucial document that will be drafted, the rules of functioning of the body, the dispute resolution body. They will have to decide a number of issues. Access, in the sense of control over the proceedings by the taxpayers, I would say yes. We have enough improvement compared to what we were. Of course, there's always room for more, but let's say that at this point, I think I'm quite happy. Thanks.
What a super panel to work with. Thank you very, very much indeed. Will you all join me in thanking Mary, Cora, and Caterina?